welcome to this week's episode of Kenya's Market Map, where we map out the financial events in the country and around the region. As always, today I'm joined by
Keegan Kipimo
and
Estefani.
And I am the host today, and it is yours truly, Daniel Kalia. So before we just start, I don't know, Keegan, how has your week been?
I've had an interesting week. A lot of highlights, stuff happening. Some have made me happy. Some have made me really, really sad. We'll talk about that. But I hope all of you guys have been well. This week we also celebrated Happy World Podcast Day.
Yeah.
And we just want to say once again, thank you so much for supporting us. Thank you so much for listening to us. Your subscriptions, your listenership are highly appreciated. Let's walk this journey together.
Yep.
Easter, how was your week?
Nothing out of the ordinary. A lot has happened, but it's quite the kawaida thing. Nothing really out of the ordinary. Very grateful to be healthy and alive again. Just like Keegan has said, thank you so much for being with us since we started this whole podcast journey, for being our listeners and for viewing us and supporting us on YouTube. We appreciate that. And we hope we continue walking together. What's the Johnny Walker? Keep walking.
Oh,
Episode number 7, right? And happy new month.
7.
Yeah.
Happy
yeah,
new month.
episode 7. Yeah, that's steady progress. So thank you everyone for watching, for listening, for your comments, for your feedback. Even before you continue, if you haven't subscribed yet, sijui kama unangoja kengele. I wish ningekuwa na sound ya kengele kwa soundboard and then ningefinya. So umesikia kengele, just hit on the notification bell, subscribe. Ideally we should have like that kaba where we say just click on the button below here.
It's actually there. And don't forget to spread the word. We're also on Twitter at marketmap_KE, LinkedIn, Kenya's Market Map. Follow us there, engage us. Our DM is open on Twitter. Ask questions. We have our website, kenyasmarketmap.com. We have a contact section there. Send your questions, queries. If you want to partner with us, you're welcome.
So we do appreciate your listenership and viewership, and we hope that you enjoy the podcast. So this week as we start, we'll start with Nation Media Group. So Nation Media Group had announced that they're going to do a share buyback, which I believe they started sometime in July.
Yeah, 28th of July. That's when it kicked off.
Yeah, so they started the share buyback. And they closed the share buyback sometime this week. Was it 28th?
24th.
24th of September.
Yeah. So almost July, August, September. So almost 2 months of share buybacks. So initially they were targeting to buy back, was it 10%?
Yeah.
Of their shares?
Yeah. Outstanding shares.
Yeah. And they bought back 8.62.
The success rate was 82.5%.
Actually, the success, I think it was around 82 or 85. I think it's 85%. It's impressive. I mean, because it's they are trailblazing on this path in Kenya. And I had the interview of Julius Amboko with the NMG group CEO Stephen.
Yeah.
And Stephen said that initially when they embarked on this journey to do the share buyback, many people, they consulted many people, analysts, investments guys and guys in securities exchange and experts all over. And most of them were telling them that if you even get 8%, if you even get 5%, you'd be lucky, the success rate. But they ended up pulling 80 plus success rate, which is impressive. My question is, are we going to see other companies take this up? Centum, there's been conversations of them to do share buyback, to uplift their NAV. So now that, a precedence has been set of a good success rate by NMG, are we going to see companies like Centum follow suit on that path?
Even before we go into whether other companies are going to do that, I think the question is why Okay, I think for the viewers maybe who may not have an idea what exactly a share buyback is, maybe we can start by letting people know what a share buyback is.
Yeah.
Easter, would you?
So in the simplest forms, in the simplest words, a share buyback is the process where a company goes to the market and buys its own shares. That is, for example, you get what NMG did. They went to the market, the NSE, the boss, and then they bought their own shares. So there are so many reasons why companies could do this, because the effect is the financial effect is just the very different outcomes that could come out of that. And so in this particular one, what the NMG was eyeing was to trade fairly. It was like the CEO, the management was like they're trading at a highly discounted price. So to increase that, what determines the price, the share price of companies, is technically supply and demand of these shares in the market.
True.
So you either, for your share price to increase in value, you either increase your demand or you reduce the supply of these shares. Reducing the supply will definitely increase the demand. That's largely how it works. Yeah. So how do you reduce the supply? You buy your own shares so that the shares of your company that are in circulation are highly reduced, or whichever, just reduce by whichever amount you think would give you the results you want.
Yeah.
So that's what they did. They went to the market, but they were seeking to acquire 10% of the outstanding issued share capital. Shares.
Yeah.
Just like Alia said, they achieved an over 80% success rate with that. So that reduced the amount of shares of NMG trading in this NSE. And so, we will delve into the whether or not they achieved the success, the purposes, or whichever reasons they were going, because seeing the share price, the effect has not been quite what would be anticipated.
My question is, yes, they wanted to, the NMG says that their shares are trading at a very discounted price. There is an underlying reason for that. At the end of the day, there's an underlying reason. And we also saw Standard Media. I think they made a loss of 60 million in their half-year results, the first half of 2021. The change in the media industry, with the digital revolution, some were caught, not moving as fast as others, and revolution creates chaos.
True.
There must be some chaos in that. And in the midst of that chaos, the speed of alignment is what makes the difference. NMG are doing great work. We saw that they bounced back to profitability, and this is courtesy of the initiatives they've taken with like the Nation.Africa, those kind of programs that have launched.
Has any of you subscribed?
Yes, I have subscribed.
Okay.
Yeah, we should talk about that.
Have you subscribed?
I have, but am I actively paying? No.
So my question is this, all right?
Yeah.
At the end of the day, there are those underlying factors, okay, in the media industry that actually determines the price, and why investors are not really rushing to buy NMG shares, so that to create a demand for it, so that the price rises, as we've seen with other stocks in Kenya, for example, Safaricom, KCB, and the equities. And many people were excited in February, when we saw the prices of NMG rise to around 25 shillings from 12. And, I was telling some of my friends that, do you know that these shares used to trade at 320, 340 shillings? So for investors who've been here for long and they've seen where these shares have come from, they're like, I'm not really going to put my money in here. So will NMG sustain that path of maintaining their shares of making sure that their shares trade at the price that it's supposed to trade and not at the discounted?
Well, I think just to clarify to viewers, when Keegan says that the NMG used to trade at 300, which is true, I think the implication could be that its demand has fallen to the level of going down to 12, but they also had a share split. in the middle,
yeah,
which now, so it's not at because necessarily the demand of NMG fell drastically. So I think the interesting thing to notice or to note was the spike. So ideally, as this I was saying, when you have a share buyback, usually one of the reasons, and I think this one of the reasons that was given by NMG, they believe that the share price was not reflective of the value.
Yeah.
So they decided to go and buy back the shares so that they get back to what they believe is the intrinsic value. And the interesting thing, when they announced in February, it was trading at around 12, and NMG bought it. Were buying back the shares at 25. That's the price that they had agreed. And now that price literally shot from 12 to 25, like the spot where guys wanted it to, where NMG was actually buying it. So I think guys who actually came in at 12 and exited to NMG made a good return
Yeah, that was good money.
over this period of time. So I think the question that I would have is, so why not for a company, or if you're management or board of a company such as NMG, this money that you're using to buy back your shares, why not just give it out as dividends to your shareholders?
Maybe I can come in there.
Dividends in COVID?
You see, actually, that's when you should give dividends, because it shows that you're thinking about your shareholders, and so you're giving them something to as something like a cushion.
You know what?
That's what Safaricom did.
But do you know what?
NMG, like a whole different animal.
NMG just bounced back to profitability. Okay. First, Safaricom is the most profitable company in East and Central Africa.
I was addressing your sentiment about it's like you're doubting whether it's really wise to give dividends in a crisis like Corona. So if your ratios are okay,
you should not. Do you know what? Because NMG just bounced back to profitability. Okay, they were making losses. Now, during the pandemic, these are times of uncertainties.
To any company, not
these
just
are
NMG.
times of uncertainties, and you really need cash at the moment. Okay, so if you really care about your shareholders, if you give them money, and then, as I've just said, during the pandemic, it's times of uncertainty. Anything can happen. Then the unfortunate happens, and the company now goes to a worse financial position.
So it's not sustainable.
You find that your shareholders will be at a worse financial position than if you had not given them the dividends. So if you really care about them, just tell them, wait, you'll get the dividends another time.
But in this case, it's still a cash outflow from the company
to
shareholders.
Exactly. Now let me,
because if you're holding and I'm buying back the share from you, Keegan, see, I've paid you, so it's an outflow still in the middle of the pandemic.
But still, you as a shareholder, the price of your shares has risen. Okay.
Well, guys, now let me just chip in there. Companies have, as a management of a company, you are the steward of your shareholders' finances and funds.
Yeah.
Your core activity there, or your biggest goal there, is to create wealth for your investors.
You have a fiduciary obligation.
Your shareholders, right? So you can do this in different ways. You can give them cash, that is in form of dividends, or you can do what NMG did. Now, when you buy back your shares, some of your shares, you're increasing the equity stake of your shareholders. So their share prices increase as well.
Yeah.
You understand?
And those
so they
who
get
want to
capital gains.
They sell at a higher price.
So even at if you look at it from a tax viewpoint, it's better to pay the lower CGT, because if what was it trading at before at 12?
Yeah.
If you held NMG shares at 12, then you sold them to NMG itself for 25. You've gained something.
Yeah,
that's capital gains. The tax on that is just 5%, as opposed to when they give you dividends, and that's income now, income in the form of dividends. It is subjected to the kawaida graduated scale of income tax, which is
income
higher.
Tax, or is it withholding?
I think it's around 15%.
It's
withholding tax.
Withholding, it's withholding, and then I
15.
think you have to, So it's still higher than the 5% CGT, So the point I was driving at here is that as a company, you're obligated to. You said it's called a fiduciary obligation.
Fiduciary obligation to act in a manner that will benefit your people who've invested.
And that's
in that
exactly
company.
what NMG did.
Yeah.
So either way, the shareholders are satisfied. At least they were satisfied from that move.
Okay. Yeah, so we could argue that they were satisfied. Although since the buyback closed, the share
It's reduced.
it's reduced slightly. Okay, it's too soon to tell. But could this be that maybe is it that the market still feels that 12 bob is the true intrinsic value? Now that people take advantage of this, it'll start going back to where it was.
I'll still go back to my other reason. There are underlying issues on why NMG shares were trading the way they were.
Tell us.
It's just market issues currently. With giant media operators, and until you deal with the underlying factors, and I think NMG is dealing with them, particularly with going digital and the likes, because now everybody's digital. So that's the way to go, because as the consumption of print is going down each and every day, same as for TV. Okay, so I think they're addressing that, and that's how they'll actually improve the value of their shares. It's the same thing with Center. Until they offload the real estate, which the market perceives it as very liquid, until they do that, no matter what they do, share buyback, what, that's the underlying factor. So I'll go back to that. But on how the performance has been, it just closed in 24th of September. I'd say we sit and watch for at least a month, 4 weeks, and then we can see now if it's trading above the 25 or below the 25.
Yeah, I think we'll be able to see the trend. So I think the other question that I do have is when it comes to share buybacks. So ideally, we've seen with NMG feeling that the share price was below what the value should be. We've seen the same thing with Centum, who feel that the share price is trading below the NAV.
Yeah, by a lot, 63%.
So what is the benefit of having the share price trading higher to a company? Like why is it important?
That is your valuation, and I tend to believe that it even attracts investors.
Yeah.
So it becomes easier. The conversation of access to capital, whether in form of debt or equity, becomes very much easier if you're, because I don't know anyone in Everready, but if Everready, Uchumi, yeah, let me use Uchumi.
Okay.
If Uchumi now comes to,
because you know someone in Uchumi.
No, I don't know. I don't know Uchumi. So if you go to,
he's a good friend of a former CEO of Uchumi.
Well, so if now you go to, if Uchumi goes to a bank or whoever it is that it is seeking a financing from, that conversation is very difficult to have, because first of all, there's no incentive. There's clearly not much market activity on the NSE of Uchumi stocks. Yeah? It shows a lot. It shows how much people relate to this company. Do you know how much people the activity of Safaricom shares in the NSE?
It's actually
a lot. It's among the highest.
Safaricom accounts to 60%.
Now look at that, of the
investors' wealth in the NSE.
So if Safaricom goes down, you can imagine what will happen to NSE. God forbid that. But you get the picture I'm trying to paint here.
Yeah.
It's because people trade so much with this. It's wise, I would advise you as our viewers and listeners to invest in companies that you understand, whose products you understand, whose operations and leadership you understand. And so Safaricom, people really interact with Safaricom.
Yeah.
And so they interact, they know this product very well, this brand and product very well, as opposed to not NMG, my goodness, as opposed to these other brands whose share prices are not as high.
And for our viewers, kindly remember that Easter is not a licensed financial advisor. If you are looking for financial advice, seek for a registered and licensed financial advisor.
No, but he's giving good points either way.
Yeah.
There, so.
Don't invest on a company simply because Easter said, then you sue him.
Wow.
Yeah.
But you get what I get.
The Warren Buffett of our day and age.
Kali, I hope I've answered you.
Yeah.
Why it's important for a company's share price to be at a good place in the NSE.
Yeah, so I think I think the best thing that we saw in the international market was with GameStop.
Yeah.
So I don't know whether, this meme stocks. So what exactly had happened was hedge funds. There are a couple of hedge funds that had seen GameStop. Their outlook was not good, so they had a negative outlook. So they basically had a sell recommendation, but then they went ahead and did short selling. So ideally, short selling is where you borrow shares from someone who owns the shares, then go to the market, sell it at a price, let's say 10 bob. Because you're anticipating that the share price is going to go low, so you sell it. Then the share price is going to go down. Then maybe when it's down to 5, you buy it back at 5.
You return the
shares to you, and I pocket the 5 shilling difference. So this is what they had done to GameStop. Then came this whole Reddit army. So
millennials.
Yeah, so they spotted this opportunity. They're like, okay, this
hedge funds.
Yeah, the exposure on that some hedge funds have on the GameStop. So it was GameStop, AMC, but GameStop was the primary one. They saw the exposure. They saw this is an opportunity now, because once we create demand on the GameStop shares,
it won't go down.
It has to go up.
It has to go up.
And if it's going up, then the hedge funds are forced to now
pay higher.
They're forced to pay high. So instead of just selling, hold it.
Wow.
So hold it. Then they have to keep on bidding a higher price. And like the share price, like
skyrocketed.
Like it went to the moon. They call it going to the moon.
That's actually the emoji they use.
It's a rock, like the rocket, like that's what happened. And like hedge funds were losing billions and billions of dollars. And what happened now, the effect that it had on GameStop, they're actually able to secure new lines of credit because now their market capitalization is very good. Their Wadosis got a lot of bonuses as a result. So especially in terms of access to finance and access to credit, where you're actually able to do like new things, it helps. So I think even with NMG, if they want to invest more into digital and they have a good market capitalization, they have a good valuation of their shares, then it could help them go more into digital and all this.
You know, you've mentioned about bosses. So the bosses got bonuses for something that they didn't actually do. But I mean, this always, you know, when we have such kind of conversations, it normally reflects a lot on how nascent our financial sector in Kenya is still nascent. You know, we are having, you know, if you compare, for example, to the US, 60 to 70% of adults in the US invest in the stock exchange, in the securities exchange. But in Kenya, only 10% of adults invest in the securities exchange. So that's really interesting. I mean, about hedge funds, I would love to see such kind of thing happen to Kenya, because I'd also make some good money from that.
I think you have enough following or what do you call it, influence to spark such a because guys like boycotted that we're not going to sell these shares. We're actually going to create demand for it.
And
so you have such following.
I mean, and interestingly, when you ask the initial question about, you know, the importance of share price on a company, there are some CEOs who are adamant about not, you know, for lack of a better word, giving a damn of their share price in the securities exchange. Them, they care about how they're operating their company and the profit. They are not really bothered what happened in the securities exchange. Do
you have a company in mind? Because there's one name coming to my mind now.
Okay, which one?
Toboa.
No, don't.
Toboa.
No, don't relate that to the not giving a damn bit.
Okay.
But Cooperative Bank. It came straight to the top of my mind when you mentioned that, because the company is making profits. Operation wise, it's very okay, but the share price is
around 10 shillings.
Other banks,
and they have good dividends. Their dividends is normally above 10%. So it's okay.
Anyway, now that you mentioned about digital in the media industry, there's something that in the annual report, I saw NMG's annual report. I saw revenue contribution per what? They have different revenue contributors.
Yeah, the
They have-
composition.
yeah, composition.
So you have print, you
Print,
have
TV.
Yeah.
Yeah.
Yes.
Paper is print and digital now.
Yeah.
Now, something funny is that the highest contributor is print, then TV, then digital.
Okay.
But
Yeah.
okay.
Now I wanted that silence because now what do you guys think?
Oh no, for me, the take home is the fact that print has been going down, okay, in its revenue
Yeah.
composition,
Yeah.
and digital has been consistently going up,
Yeah.
and that automatically speaks to the fact that digital is the way to go, and NMG should actually invest more in digital, and I think that's what they're doing.
Yeah. True. But for me, what I'm thinking is, I think there are two distinct markets that also I think as media companies should probably maybe look at, because we have your urban company and their trends. So I believe
Yeah.
you, all three of us, I don't know that last time you bought a newspaper.
Kitambo.
Must have been a month ago.
Okay. Again, you're
Old school,
you're the
Old
kind of you're going to be the kind of father who goes to visiting with a
Yeah, and,
Yeah.
and
with
a bottle of
gazette.
water.
Yeah,
And Dasani. Or here these days it's Keringet. Shout out to Coca-Cola.
Yeah. So yeah, there are two distinct. Like the urban market really does not rely much on
Paper or print.
Yeah, because for me, mostly I think I get most of my news on Twitter, getting the links and whatnot. Which that's how I've gotten now into the digital bracket of NMG because I've subscribed to their online. So whenever it's I'm able to access their articles.
Yeah.
But then there's a rural market whose main form of news is primarily TV, and they also need to buy newspapers.
Yeah, Keegan.
Say again.
Yeah, so I don't know how exactly that's why they are paid to do their work. How to map out the two different markets and maximize print in those areas, and then for the young urban guys who are getting out of uni, guys who are in these urban centers, how to maximize the transition into digital, because long term it's going to be digital for most guys.
A big boost for print is actually, print has become a culture, and has become a culture to the extent that in government offices there is an allocation for newspaper.
Yeah.
That's what is actually sustaining the print. You find that in most offices in the morning they'll bring around 6 copies of people's daily what they bring to the offices. Even in private companies they bring it there. So that's I think what has sustained, because if you supply in every ministry, and every authority, government organization, and even guys in private sector, so gazettes get there every day at 7 in the morning. So that is what has actually sustained them.
Now, it's good, Kalia, that you mentioned that it's actually important for these media companies to have a distinction and to know where to supply what. Because in the urban centers, it is, again, people, if you look at the demographics in the urban centers, of the urban centers, it is the youth who are there. Yeah. And so what does that tell you? It tells you that as a CEO, you need to be very strategic, even with your content. What sort of content do you drive and where do you drive it?
Yeah.
Because in urban centers, you have to use digital. That's where people are. Yeah. And then if now you go to the urban centers, the rural settings, now you use the traditional ways of news spread.
But Easter, let me differ. Let me disagree with you slightly. I think Kenya is a unique country in sub-Saharan Africa.
Tuna tabia zetu tu.
And particularly because of, I normally refer a lot, and I've said this on this podcast before, that Kenya has the highest internet penetration in Africa at 87%. So that gives Kenyans and actually the media companies in Kenya an advantage, when it comes to conquering the digital market, because people are highly connected. Okay, you find if there can be a way, especially what is shared on WhatsApp, a lot of links, a lot of stuff is happening. So it's actually not necessarily the young people, but the old people also are in that space. But I really think the market is dynamic each and every day. especially at the moment. This is just according to my own analysis, probably anecdote. Kenyans are really appreciating a lot of infographic content right now. If you want to talk about, for example, what is happening, what Safaricom, what happened in Safaricom, if you have just a 15-second infographic clip that shows their revenue, what M-Pesa did, what M-Pesa that Kenyans have that for breakfast, lunch, and dinner.
Yeah, because I think it's I don't want to say a consequence, but it's symptomatic of the information overload that we do have, because we have exposure. There's so much we need to read. There's so much we need that we have access to. So if you're able to pass your message in the quickest and the simplest time possible, then the better for you. If I'm able to have a graphic, and this is what I think CEOs, and also I was reading something about venture capital firms. The average time that it takes to decide
whether I'm investing or not.
In a pitch,
it's 3 minutes and I don't know 28 seconds. They just look at a pitch deck. So anything below 2 minutes, you're not getting any money.
So the fact of how you've presented it, it should be in a very simple way that I'll be able to pick the most important things. Okay, I'll be able to pick your revenues. I'll be able to pick blah 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 in a very easy way. So that I can manage in the 3 minutes that I only have for you.
Well, guys, as we put ourselves into the shoes of these CEOs and when what thought processes they have when they're deciding where to invest. Whether to go digital fully or to how much to allocate towards these strategies. It's important that we acknowledge the fact that something is escaping my mind. The fact that there are so many components that are so even out of control of these CEOs. There's culture. That's what informs even the culture in urban settings and in traditional in rural settings are very different. That's why they consume different content. In as much as the difference is being narrowed each and every day, because if you send your father an article, your father or grandfather in the village an article using a link, you're definitely pushing them to the digital side. Instead of making a phone call so that a newspaper is delivered to him somewhere. You understand? So the gap is being narrowed day by day. But then another thing. That is one. That is culture.
Factors
that is one.
Control.
The other one is economics and personal finance variables. Because you look at not everyone can afford digital. It is funny because digital is cheaper than really is it, because there are other costs. Because there's cost of data, there's the other costs. I don't know how much they compare if you aggregate all these costs towards consumption of digital with consumption of print. Just buying a Gazette and buying, because a Gazette
let me tell you what, it's cheaper. Do you know why it's cheaper? Because efficiency is a cost.
Capital efficiency.
It's a huge cost. Digital is cheaper.
But the Kenyan consumer, to be honest, is not that sophisticated to put a value on what do you call it? On efficiency. Because if you look at even the same annual report by NMG, what it shows is that the subscriptions are going up. They're really going up. People are, so what does that tell you? People are validating this. We need it. We need this print, not print, digital. We need it, and we can subscribe. But if you look at the active payments, they're not as high. They've actually been reducing. Exactly, because people at the onset, people are very excited. They subscribe, but now when it comes to making these payments, they don't have that money. And it is overall. I mean, look at these apps that you pay for, and you have 1 month free subscription. The variance between subscribers and people who actively pay for these products, it's very huge. So personal finance economics is also another variable that you have to consider there, and CEOs cannot control these things.
No, they because ideally as NMG or as a media conglomerate company, your key thing is having repeat customers. So trying to so when you say CEOs cannot really control, they kinda can, because you need to find out what is it that would bring.
That's why you're the CEO, and that's why I was challenging Easter's statement that things beyond your control. I mean, things beyond your control. I don't think that exists. That largely exists. Okay, there are things that, for example, if the country is going through an economic crisis, that of course it will have, or the pandemic, that you can't necessarily control 100%. But there are things that you can do to mitigate.
Yeah.
Okay, there are mitigants that exist. So you can't say that generally that there are. I know that it's a relative statement, but you can't say that generally that things that they're out of control.
But
I feel that's a lazy statement.
Is that not what happened in 2020? Because when did they launch the Nation Digital?
Actually, Nation Africa probably 2019.
2019 heading into 2020.
Probably, most likely. Yeah.
So at this point, you're competing with this. You're competing with other interests for this consumer's other interests. These consumers to buy food, they have to buy whatever. Then they also have to buy this gazette of yours.
Yeah,
or the digital.
Yeah,
or not.
but
so you can't control that. Plus, the income you may reduce.
No, you can. And that, okay, your point kind of ties up to what Keegan was saying about internet penetration at 87%.
Yeah.
Because what we're seeing is what the media, and this is not just a Kenyan phenomenon, it's global. What we're seeing, competition for where you get your information. Primarily, before it used to be the main media stations or media houses where you go for information.
Yeah.
I remember in high school, since all of us went to the same high school, not the same time. But for me, personally, I used to rush to the library between 1:30 and 2.
For the newspaper.
Yeah, for the newspaper. And because they used to be delivered every day.
Yeah.
And there was, I think, I don't know whether it was 2 of each, 2 of Standard, 2 of
Nation,
and 2
no Business Daily.
Business Daily, and I didn't have an interest in Business Daily. My main interest at the time was just going to the sports news, football.
I was going
what
for Pulse.
that was Fridays.
Yeah,
Pulse was Fridays. Yeah, and you'd go like, hey, you have to befriend the
librarian.
The librarian. I remember, constant guys. It used to be myself. There's another guy called Peter Kipkech.
Shout out.
Yeah, and then it was like the librarian would not allow you before 1:30, so you've gone for lunch quickly. Anyway, that was then. The main source was
print.
was print.
Yeah.
But now with the digital age, which is the point that I was making, with the digital age, you find places, people like with TikTok and short videos. It could be entertaining, which is what also media houses want to try to tap. It could be entertaining, and also it could be informational. So, because for Kenya we have greater, and this is why even with this podcast, primarily you would have some people who, if they want to know what's happening or want to have insights, instead of going probably to maybe Nation, NTV's media, YouTube page or whatever, or whoever, they come to us. And that's because the internet productivity or the internet penetration is helping other people put content. Yeah. So the challenge that many traditional media houses are facing right now is trying to get on top of this. And I think just in what slightest segue, we've seen also the impact of media houses on politics with most of the big, especially in Kenya, media is used as a propaganda tool, whatever you want. So you've seen, of course, we know the First Family has ties to K24 with your Kameme FMs and all that. We've seen who else?
But do you know what? I think there is a challenge there. Okay, because I'm looking at the impact of Twitter, WhatsApp, Facebook. Tell you what, they have a bigger impact on propaganda than traditional media, than radio stations.
But they don't have.
It's the things that are just forwarded on WhatsApp, the kind of propaganda and Twitter, the hashtags.
Battalion.
The TVs can't come anywhere close.
I think
anywhere close.
Parents are soldiers in the forward battalion. But we did see this in 2017. Especially with Cambridge Analytica, and how they use social media.
I'm actually reading a book called Mindfuck. Not the best of topics. It's called Mindfuck. It talks about Cambridge Analytica. It's actually by the the author is a Canadian who went to the UK to study and is one of the people who was part of the Obama campaign and how, you know, that was the start of digital and getting online to try to convince people. So it's an interesting book. If you want to understand a lot, you can read about that. There are instances of where Kenya is mentioned, actually, of how of the 2017 elections and how money from the Ministry of Health was actually put in diplomatic bags. You know, diplomatic bags are normally not checked in the airports and taken to the UK as form of payment for Cambridge Analytica. A lot of stuff that was done in other countries, military was involved, places like Trinidad and Tobago. A lot of stuff that happened there. So, it might happen again in 2022. It's just a different name from Cambridge Analytica.
Yeah.
Like the author got the title right, very right, because that is what it actually does.
Yeah. They steal your
that's
data.
very direct. It's very direct.
Yeah.
And you see, marketing, it's been the psychological marketing. It's advanced very fast in a very short time, from being as simple as changing the price tag of a commodity from 1,000 to 999. To now, they are now trying to manipulate the user into consuming things they don't need, and so there's a lot of, we really need ethics into in the curriculum of marketing and all that.
Yeah.
In universities.
I'm
and
telling
all
you
because
that book, mindfuck, because there's, for example, if you look at Kenya, you'd find that mostly this is just an example. You'd find there are places where there are swing votes. Okay, so let me take for example places like Nyamira and Kisii. Okay, it was partly a swing vote between NASA and Jubilee.
Yeah.
So what you'd find is that they would really target such places. So for example, you'd find content that has Raila Odinga, and then next to Raila is a photo of a slum. And then it's written there, Lord of Poverty. So they'd circulate these to especially people, if they'd find that your name is Omanga, that they'd profile you as a Kisii person, they'd show that content would appear a lot on your timeline,
your feed,
so that to swing you to the Jubilee side.
Yeah, because it plays with your psychology.
And you wouldn't even
and that's
know.
the danger.
And then
That's
if you are,
because you don't know how it's affecting you. And
if
even
you are
when.
a young person like us here, for example, most of the people actually, as we saw is from the KNBS stats, it's the youth are the ones who are really suffering, from unemployment. So you'd find that they'd put a picture of Raila, and there were allegations of Raila with kazi kwa vijana, that when he was a prime minister then.
Kazi kwa vijana, pesa kwa
they'd
wazee.
bring that thing of Raila stole pesa for vijana. Okay,
That's what they were saying.
and then if you're a young
went to
person,
the scandal.
that content would appear a lot on your timeline.
Yeah.
So they really play with your mind, and you don't even know.
Yeah, so I think now the traditional media houses are struggling to keep up or keep pace with those changes.
Yeah, and some time back, credibility was limited, was only given to these few media houses, the conventional ones. Nowadays, we have bloggers coming up.
Yeah.
Given the same, they're really competing. They're giving these media houses a run for their money.
And people
when it
who've
comes
even
to credibility.
challenged them that you've reported fallacious
Absolutely. And these lawsuits and all that,
news.
they're losing. They're feeling the heat.
We've talked a lot about media.
Yeah, I think we've delved a lot into media and all this, and I think just last fun fact, we have the dynasties of the country have their own media houses where they are tied to. So as I
I don't
was saying,
really
the Kenyatta-
appreciate that term.
What dynasty?
Yeah. Okay. Let's not get political.
Anyway, the point was we're heading into political season, so of course we do know that the First family has ties to K24 and I don't know what's the brand.
MediaMax.
Yeah, MediaMax. And then of course we know the Moy family has ties to
Standard
Media. I don't know what the Hustler has. He just has Itumbi to push his propaganda. But I think Standard Media Group are, if they have not launched, I think they should be launching
What?
Kalenjin station,
Oh,
Kalenjin radio station for I guess now as we're heading to
And
2022.
vernacular stations actually have a very big impact because they speak to people's hearts. But for me, as we just close this conversation on a political note, I'd just like to tell Kenyans that on the 4th of October, IEBC is going to start registration of votes. Please register your votes. Each and every day we talk about the debt situation in Kenya and our fiscal performance generally. And we are here because of the leaders we have.
Yeah.
So your vote is your best tool.
Yep.
That I can tell you that. So register your vote and next year make the best decision.
Yeah, register, but just know you're going to be manipulated. So try to be smart.
Be wary.
Anyway.
Yeah, anyway, so I think we've now I don't know whether there's a certification for media strategists. We should add that to our CV after this discussion. We've gotten deep. It started as just a simple buyback discussion, but we've delved into a lot of the media. But that's the beauty. That's the beauty of
Insights.
of the podcast.
Insight.